Next, 139A and 139A, quoting of PAN number and quoting of Aadhar number. So the first for permanent account number, which is PAN number, which consists of n alphanumeric numbers in it. There are two categories who has to, and like two due dates before which an SSE should apply for PAN. First category would be on or before 31st May of the assessment year. First is that his total income exceeds maximum amount chargeable to tax. Second category, any person other than individual entering into a financial transaction equal to or more than rupees 2.5 lakhs in a financial year. Any person who is competent to act on behalf of the above. That is in case of a firm, a partner, or company, or director. Second category would be before end of financial year, that is 31/3/2020 in case of assessment year 2021. So if the total sales or turnover in case of business or gross receipts in case if the assessee is into profession is likely to exceed 5 lakhs in the previous year, then he has to apply PAN. Next would be compulsory quoting of PAN number in certain documents. One, return of income. Compulsorily, PAN has to be quoted. Second, challan paid against any sum due under this act, which is Income Tax Act. Then the PAN number should be quoted. Further, the other categories can be divided into 6 groups. First one is transaction of any amount. So under transaction, that is without any amount limit, even if there is a single rupee transaction for next 4 transactions, the assessee has to quote in the documents pertaining to such transaction. First category would be sale or purchase of motor vehicle or vehicle other than a two-wheeler. Second is opening an account other than a time deposit, because for time deposit we will be looking into the amount, threshold amounts, and saving banks account with a banking company or a cooperative bank institutions. Third category is making an application to any banking company or cooperative banking company to issue a credit card or debit card, opening of a demat account. So there are four categories without any threshold for which PAN is compulsory. One is demat, opening of a demat account. Second would be making an application to any banking company or a cooperative banking company for issue of credit card or debit card. Third category would be opening an account other than savings bank account and time deposits, because for time deposits threshold differ. Fourth category would be sale or purchase of any motor vehicle or any vehicle for that matter, except for two-wheelers. Second category is payment in cash of an amount exceeding 50,000. So second category where we are dealing only with cash payments are exceeding 50,000. Again, that is divided into 4. One is payment to a hotel or restaurant against a bill at one time. The second would be connection with the travel to or any foreign country or any payment for foreign purchase, foreign currency purchase at one time exceeding 50. Third category would be cash deposits into bank or cooperative bank where exceeding 50,000 per day. Fourth category of payment in cash exceeding 50,000 during one day would be purchase of bank drafts or pay orders or banker's check from a banking company. So next category in the same threshold amount, which is 50,000, irrespective of being a cash or a bank amount, would be payment to mutual fund for purchase of its units. Second is payment to a company for an institution for acquiring debentures or bonds issued by it. Third is payment to Reserve Bank of India for acquiring bonds issued by it. To summarize, first, without any threshold, that is transaction of any amount, would be 4. So there are totally 4 nature of payments, which comes under the first category without any threshold. Second is payment in cash exceeding 50,000 is again 4. However, payment exceeding 50, irrespective of cash or bank, would be 3. Next is amount exceeding 50,000 or aggregating 5 lakhs in a year. That would be term deposit in any bank or a post office or a Nidhi company or any NBFC. So if single transaction is above 50,000 and aggregating to more than 5 lakhs during the year, the same is subject to PAN. That is, the PAN should be quoted in all the documents. So such transaction has only one category in it. So, fourth is amount exceeding rupees 1 lakh per transaction. A contract for sale or purchase of securities. So when there is a contract for sale or purchase of securities, amount exceeding 1 lakh per transaction would be subject to quoting of PAN in all its documents. Second, in the same category is sale or purchase by any person of shares of a person not listed in the recognized stock exchange. So there are two kinds of payments for this category. Fifth is amount exceeding rupees 10 lakhs, and that would be amount exceeding 10 lakhs or valued by stamp valuation authority referred to in section 50C at an amount exceed. That is, for sale or purchase of an immovable property, if the amount exceeds 10 lakhs, then the same is subject to PAN. Sixth category of all, and the final one is amount exceeding rupees 2 lakh per transaction, which is sale or purchase of goods or services of any other nature other than the above. So this one is a miscellaneous category whereby any amount which is not mentioned in the above has a amount of transaction above 2 lakhs, and the same is subject to coding of PAN in all its documents. So in short, if after this exams, if you're going to treat your friends in a big 5-star hotel and you end up paying a cash amount of 50,000 above for the single treat you're going to give your friends, then you will have to have a PAN. So better apply for PAN before writing exams. Next category is quoting of Aadhar number, which is governed by section 139 AA. Now that we all are aware of what an Aadhar number is, it is mandatory to quote an Aadhar number in application for allotment of PAN number. Second category would be return of income. So now anyone who has to apply for a PAN should already have an Aadhar number. Second, consequences of failure to intimate. So as per 139(1)A, a person has to 139AA, a person has to mandatorily quote Aadhar number in the documents. If not, if Aadhar number is not allotted, then the person has to intimate 28-digit enrollment identification number issued to a resident at the time of enrollment. In case if a person fails to intimate such Aadhar number or enrollment ID, then PAN allotted to such person would be made inoperative after the date so notified in the prescribed manner. Miscellaneous topic is that this section shall not apply to 4 categories of people. Who are they? One is residing in the states of Assam, Jammu and Kashmir and Meghalaya. Second is non-resident as per Income Tax Act. Third would be at the age of 80, super senior citizens. So 80 years or more at any time during the previous year, or not a citizen of India. So non-resident and not a citizen will not have an issue. Third would be super senior citizens, age of 80 years or more at any time during the previous year. And the fourth category would be residing in states of Assam, Jammu and Kashmir and Meghalaya. Our final topic of discussion would be when is it interchangeable? That is PAN and Aadhar. When a PAN can be interchanged with Aadhar. So with effect from 1/9/2019, when an assessee or when a person has not been allotted with PAN, one. Second would be has been allotted PAN and he has intimated his Aadhar number to the prescribed authority. So in these two scenarios, Aadhar number can be used in the places where PAN was made mandatory. Next is section 140, person authorized to verify return of income. kindly go through all the 8 categories of people, which has scenarios into it, where there are like 4 scenarios for an individual who is the person authorized. For an individual, generally it is himself, but other 3 scenarios may be when he's not available in person in India, or the other categories like when he is not stable enough to authorize his return of income. So there are 8 such cases or 8 such assessees for whom. So please go through this at your end, because this might be an MCQ in your question paper. For example, a return of income has to be verified for a company. It has to be verified by a manager, secretary, general manager, or a managing director or director. In this case, it is managing director or a director. So it can be asked for any such points. The last is self-assessment tax, section 140A. That is tax payable on the basis of return required to be furnished under any of the sections of 139. In 139, as discussed below, self-assessment tax is nothing but tax computed for the financial year on the basis of total income computed after taking into all the credits, that is advance tax, TDS, TCS, or MAT credits, if any, or any other relief available to the assessee. So let's try some MCQ here. So the first one is, which of the following returns can be revised under section 139(5)? So only a return of income. No, this was discussed. This is nothing. Belated return has already been barred time, so you cannot revise that. So option C is the right answer. Second question is, Mr. Hay has a loss of 8 lakhs under the income from house property, which could not be set off under any other head of income. So even if we will study this during income from house property lesson, however, the total loss that can be set off against any other income during the year from house property would be only 2 lakhs. But here it is mentioned that they do not have any other income that can be set off against this 8 lakhs. So now, continuing with the question, the due date for filing of return of income in case of Mr. A has already expired. So, as discussed below, in case of belated return, income from house property or income from loss from house property, return of income need not be filed within the due date under section 139(1). However, A has filed his return belatedly. Now, while filing the return of income for assessment year 2021, so the option would be, first, no, he can set off loss. Second is that income from and income from its out property. No, within the intra head, that is within the category of income from house property, any amount of loss can be set off. So B cannot be the option. And for option C, it is already mentioned in the question that there is no income that can be set off against. So option C cannot also be the option. So D, where during the assessment year. So D should be the right answer. So now we'll check RTP, what has been asked. So Mr. Sudarshan, due to inadvertent reason, failed to file his return of income on or before the due date. Can he file the above return after the due date? If yes, which is? So it should be dealt with the belated return section. And what is the due date? It is before the end of the assessment year. In this case, since there is no assessment as such, it will be before the end of the assessment year. So since it's assessment year 2021, 31/3/21 will be the last date for a filing. Consequences of non-filing, we'll have to mention the consequences of interest under 234A, fees under section 234F, and if he has any other income other than income from house property and the unobserved depreciation, he not be able to carry forward the same. The same has to be mentioned as answer. So based on the past exam question trend, after completing advance tax and filing of returns, say we are somewhere put between 5 to 8 marks in our pocket. So make sure you're thorough with these 2 lessons, which is like really small and easy to understand. Please do comment if you have any questions on the above two presentations. Thank you for listening.